Go.
Streaming from South Africa to the world. This is the Stonks Go Moon podcast. What just happened? We break it down so you don't have to.
Welcome everyone to the Stonks Go Moon podcast. My guest today, very special guest, Salah Bouhmidi. He is the head of markets for Germany, Austria, and Netherlands at IG. Salah, how are you?
Hi, welcome. How are you?
Such a pleasure having you on. I think the timing is perfect. For most traders, when they only start out, they choose the DAX. Why do they choose the DAX? I always say she's a very straightforward lady, and sort of, you know what you're going to get. Not too volatile, not too exciting, but just enough to make some money. She's going from a very dull 30 to a very sexy 40 quite soon.
Right.
What will the impact be for traders and investors? And, you know, what type of companies are being added? And yeah, if you can just unpack that for us, that would be great.
Yeah, what an impact could traders see or investors is one important thing. We're going to diversify. Of course, the DAX now gets 10 stocks more into his index, and this is a diversification of risk, of course.
Oh, yeah.
There are 10 new companies that are, quite diversified, but a really big impact. I think we don't see any big impacts because often if companies are picked out to get into an index, there's rumors before, and scientifically, I have proved and checked that a lot of companies in the world have been there have been an impricing effect of that these companies will get into this index. Of course, a lot of big funds and ETF trackers will definitely have a focus on these companies, and they need to rebalance their indices or their portfolios. So I think to make a long story short, we typically and mostly the investors will have a better, broader index than before. And there's already now discussion about whether the DAX will get additional stocks into the DAX. So it might be in the next future a DAX 50. So I think they want to see, of course, whether this is something improvable for the DAX. And if yes, from a scientific view, it's always better to diversify your index to a broader index like the S&P 500. Brilliant chart book, example for a really broad index. But sometimes, of course, you need to have these companies. USA is, of course, a big country, a big economical, the most important economical power in the world. And they have 500 companies that you can use to create an index, which is in Germany it would be the whole index. It will be MDAX, SDAX, TechDAX, and the real blue chip DAX. And then even you would not have 500s.
Yeah. But it sounds to me like, if from my perspective, it's from a risk standpoint, it's going to be better because it's going to have less underlying risk expanding the index.
Right. Exactly.
So let's take that and take it from a trading perspective. And I want to talk to you about indicators. And I'm going to come to your special indicator a bit later. But for a novice, right, that hasn't even maybe experienced trading or listened or, you know, some sort of idea, what exactly is an indicator and how does it work?
Perfect. Great question. An indicator, to be really short, is actually only math. Okay, maybe you get scared and say, oh man, I'm not good in math, so I can't interpret them. No, of course you can. Indicators are mostly in technical analysis or on stock market trading.
Yes.
It's actually statistic. We are taking numbers from the history. So we take 10 years of Lufthansa, for example, and we look what was the closing price, for example, in this time series in this last 10 years. And all indicators, the most indicators, based on historical data. So they take this data, like taking the most easiest example as an indicator, the moving average. What is the moving average doing? He is averaging the price that you had maybe the last 10 years on a close basis. So they take every day the close price of Lufthansa and they add it to their average calculation and divide it by 10 years. So 2,400 days, if we call it like this, because one year has 240 or 250 trading days. So if you multiply it by that, then you would have this. And then you get a number. This crunching number is one data point and is maybe giving you an indication of what the market is going to do.
A probability, yes. It's not a certainty, a probability, yes.
And of course, that's why what I always tell in my coachings and also in trading, you can't use just one indicator to explain what is coming next, because you will already have a bias in your interpretation. There will be other variables which could be filtered by other indicators that could give you more and more explanation of what you're doing.
That's a brilliant answer. Before I get to yours, what is your favorite moving average and why?
Oh, yeah, nice. I have a mix of favorite in moving averages. I use exponential moving averages and normal smooth moving averages. And I use the 21, the 34, the 55, and typically 100 in commodities and 200 on stocks. Why I use this, different numbers than others, I like to use Fibonacci numbers. The 34 is a Fibonacci, the 21, 55.
I get you. You could have also just said it works. I would have accepted that as well.
Yeah, but there are different variations that you can use. It's always, it needs to fit to your trading style.
Yeah.
As a beginner, of course, you will wonder and say, what is a trading style? How can I get a trading style? Of course, this is a thing that you will not have in one day. It's a character thing. You will need to prove, you will see Rocco, you will see Salah, and you will create your own style.
I actually said this week that you need to adapt your own training methodology. You cannot just follow someone blindly, because we are differently. If you're not automated or machine trading or quant or whatever, then I believe in the heart and soul of the trader. My risk analysis or my risk appetite isn't the same as yours. So therefore, you cannot copy me blindly. You need to adapt those methodologies. So something that I've been keeping tabs on, and I'm quite interested, and I think there will be other traders in the market as well, is something called the Bouhmidi Bands. And this is an indicator that, am I right in saying you developed?
Yes.
Okay,
yeah.
So traders might be, if they're a bit more advanced, familiar with something called the Bollinger Bands, where two price bands basically follow the price movement. So in sort of that context, can you explain to us like what the Bouhmidi Bands are and how they are used, and also like where people can find them? So it's a three-part question.
Yeah. To make it really short, they have a small difference to Bollinger Bands. I met him, he motivated me to do further. So the only difference is, or a big difference is, that I use implied volatility. I talked to you to that question that you said, indicators, when I said we take data from the past, but the past is not always the best estimator for the future.
Oh.
And that's why indicators have a lag sometime, because because they just show you what happened in the future, in the past, and nobody knows when Corona, this black swan, would come into the market. So it's different, it's difficult. Yes. But I use implied volatility, which comes from the option market and is, for me, a kind of more heading to the future than just using historical volatility.
Yes.
And there are a lot of other volatility indicators like Keltner channel, average to range, Donchian channel, but they all use historical variable. And I use the implied volatility to visualize resistance and supports that are not visible only if you take this variable of implied volatility into your mechanism. And of course, it's not an contra indicator against Bollinger or Keltner saying, "Hi, no, they have forgotten it." No, it's a good modification to that, because if you use Bollinger and Bouhmidi bands or another volatility indicator, you will have the implied volatility, resistance and support bandwidth, and you will also have the historical. And we see scientifically, implied volatility often overstates the historical volatility. That's why we are coming now to the point how we can use the Bouhmidi bands.
Yes.
If we break out above or below the upper or lower Bouhmidi band, there is a high probability that we will see a mean reversion. I
say a very scary, I mean, this is not financial advice by any means, but a very scary accurate or accuracy that if you want to go and check out, you can check him on his LinkedIn feeds and his posts. It's not like made up or fabricated or whatever. He will often post beforehand and say, we are about the Bouhmidi bands, mean reversion coming, and then it happens. It's not necessarily to say that it will happen, but it's a high probability.
Exactly. And we are already discussing in LinkedIn, and it's amazing, of course. And I'm surprised as well sometimes how accurate it is. And this is something because, of course, it's not known in the market, and it's something completely new. And this is helping and showing you something which is statistically actually proven, and we can filter and find it. That's why this bringing this invisible resistance and supports into the chart. And that's why, for me, I was a beginner 15 years ago as well.
Yes.
I want to have this something, if you visualize something, people can more and more work with it and modify it and get something around it. So it's a laboratory, and everybody is welcome to discuss with me about the Bouhmidi bands, to filter them, to use them in other ways. You can use them at TradingView. You can, it's a free indicator that you can choose. You can, in the near future, you can use it at IG as well. So there are possibilities. If you want to discuss with me, you can come at Twitter, at LinkedIn. I will write a small essay about the Bouhmidi bands also in English and Dutch and German, so that people can use it as well. I mean, you are from South Africa. You speak Dutch as well, of Afrikaans?
Ja, Afrikaans, kitchen Dutch. So if we talk, as ons baie stadig praat, kan ons mekaar verstaan.
Ja, zie je, ik kan jou ook heel goed verstaan, hoor. Nice.
Salah, before I let you go, one or two training resources for novices that maybe they can go and check out that you would recommend?
Yeah, something really classic. I mean, okay, it's a book, but people don't use books anymore. Technical analysis of John G. Murphy is, for me, really the key to, you need to have it for you as a technical analyst or trainer. Yes. I'm still looking it's my Wikipedia, kind of, for technical analysis.
Your Bible for analysis, yes.
Exactly, and I would recommend people, this book, to have it home, always checking up if you see some patterns, approving it and compare it. It's a really, really it's a cheap book today, but books that sometimes they are cheap and they have so much value that you never can expect. And it's a great, great, great book. Everybody would tell you that.
Yeah, well, brilliant. Thank you so much for joining us. If the listeners want to get in touch with you and see what you're up to, where would be the best place to do that?
Yes, on Twitter, it's the best place. I mean, you can also come to my page, www.salahbouhmidi.de. And you can then just write me an email. At IG as well, I'm offering a daily live stream for those who are German speaking every day on a daily basis at US Opening on YouTube. So,
ladies and gentlemen, there is a brilliant excuse to go and learn German. The man, the legend, Salah. Thank you so much for joining us. To our listeners, peace, love, and prosperity, and we'll take you in the next one.